This is East Asia Tonight.
Good evening, I'm Telly Edwards. Tonight's top stories from East Asia. China is urging a full investigation after a deadly blast at a Chinese-run restaurant in Afghanistan killed at least 7 people. Islamic State has claimed responsibility. Now, after 7 years, Britain's set to decide on China's mega embassy in central London amid security concerns and Prime Minister Keir Starmer's looming trip to China. And North Korea's Kim Jong Un has sacked Vice Premier Yang Song-ho on the spot at the opening of a key factory, calling him irresponsible and lashing out at other incompetent officials. And Japan's bond rout deepens. 40-year yields hit 4% for the first time since 2007 as investors reject Prime Minister Sanae Takaichi's tax cut pitch on food. Ahead on the bulletin, tourism numbers at a record in Japan. Millions flocked to the country last year, lured by a weak yen. And that's despite Chinese visitor numbers plunging over diplomatic tensions. China's embassy in Afghanistan is urging local authorities to investigate a deadly blast in a Chinese-run restaurant. At least 7 people were killed, including 1 Chinese national. The Islamic State group has claimed responsibility for the attack. Now, police say the explosion happened inside a hotel complex in central Kabul yesterday. The restaurant, which mainly served Chinese Muslims, is located in Kabul's Sharia Nord district, a commercial area with offices, shopping centres and embassies, an area considered by local police as among the safest in the city. Well, videos circulating online show debris strewn across the street. Several people were also wounded, including 5 Chinese nationals.
我们对遇难公民表示深切哀悼，向受伤公民表示诚挚慰问。中方已向阿方提出紧急交涉，要求阿方全力救治伤员，进一步采取有效措施保护在阿中国公民、项目和机构安全，尽快查清真相，惩治凶手。
Beijing also renewed its warning for Chinese citizens not to travel to Afghanistan in the near future. Now, those already in the country have been advised to enhance awareness and move away from high-risk areas. Islamic State group said it was a suicide bombing attempt targeting Chinese nationals. In a statement, the group cited alleged Chinese mistreatment of Uyghur Muslims as the motive. Now, rights groups have long accused Beijing of widespread abuses against Uyghurs, a Muslim ethnic minority from China's far western Xinjiang province or region. China has repeatedly denied those allegations. The Taliban, following their 2021 takeover of Afghanistan, have been working to restore security, to court foreign investors to replace shrinking aid flows. While Chinese business visitors have increased since then, attacks have followed. The Islamic State claimed a deadly strike on a Kabul hotel, popular with Chinese guests the following year. Now, the UK is expected to approve today China's plans for a so-called super embassy located at the former Royal Mint, a stone's throw from the Tower of London. Beijing's proposal has been delayed multiple times since China bought the historic site back in 2018. The new embassy will, if approved, become the UK's largest such complex by area. But the planned move has raised fears in London over potential security risks. And the decision comes at a crucial time for bilateral ties. Keir Starmer is widely expected to visit China in the first such trip for a British Prime Minister since 2018. Now, Beijing has complained about the years-long delay in approving the project, accusing London of complicating and politicizing the matter. The Chinese Foreign Ministry warned last month that the UK shall bear any consequences if the embassy is not approved. Well, Ollie Barrett's covering this story for CNA, and he joins us live from London. So, Ollie, how crucial is the approval of this embassy to the UK's ties with China?
I think it's considered to be very important indeed. And as you were saying, Keir Starmer is expected to visit China by the end of the month, potentially. And part of the reasoning behind the government trying to stick to this timetable of giving a decision by today, I think is so that if Keir Starmer does indeed travel to China in the coming week or so, that this is a decision he can say has been taken. It is very, very controversial here in the UK, though, not least among local residents close to this Royal Mint Court site here, but also among opposition MPs and some Labour MPs too, who raise all sorts of concerns about national security issues. They worry about cables passing under this site that carry crucial financial information between the City of London and Canary Wharf, for example. There are also dissident Hong Kongers and Chinese in the UK who worry about having such a large premises on UK soil, and they say they think it could be used to crack down on them. China would deny that. The UK intelligence services, we understand, believe that any security risk from such a large site here could actually be mitigated, and they are making the case to government, we understand, that actually having 6 or 7 Chinese diplomatic premises, which you have at the moment in London, instead having just one major premises, security officials believe that actually that could make their life easier rather than harder. But it would be very, very controversial domestically, even if it would potentially smooth ties for Keir Starmer as he prepares for an expected trip to China.
So very controversial among the locals and perhaps some MPs. Aside from that, what kind of challenges will we likely see to the government's decision?
Well, this has already been a long delayed process, and Beijing has expressed some frustration with that over recent months and years, but it could yet take years longer. There are residents' groups here who are suggesting that they are trying to raise money to launch a full judicial review into the decision if, as expected, the UK government gives this site the green light. That could bog the process down in the British courts system for years to come. So even if we do get the expected go-ahead from the UK government, the story is very much not over at that point. But this really would be a vast site here at Royal Mint Court, 2,000 square metres or so. Several hundred members of staff would be operating in what would be one of the biggest embassy sites anywhere in the world.
Many thanks for that report. Ollie Barrett for CNA in London. The South Korean President Lee Jae-myung has ordered a thorough investigation into a civilian accused of flying a drone into North Korea.
이 전쟁 계획이나 마찬가지죠. 북한 지역에 총 쏜 거하고 똑같잖아요. 멋대로. 근데 이런 걸 어떻게 과감하게 이렇게 할 수 있는지 정말 이해가 안 됩니다. 이게.
Mr. Lee warned during a cabinet meeting that the incident could create unnecessary tension with Pyongyang and damage South Korea's economy. Now, he said that those responsible must be identified and face stern penalties, stressing the need to ensure it never happens again. Well, North Korea earlier this month claimed a South Korean drone had entered its airspace, releasing photographs of debris and aerial images of buildings it said were taken by the drone. Last week, Kim Yo-jong, the influential sister of North Korean leader Kim Jong Un, urged Seoul to investigate, warning that further provocations could lead to serious consequences. Now, South Korea's military has denied those claims, saying the drones were not operated by its armed forces. Meantime, North Korean leader Kim Jong Un has sacked a vice premier who is in charge of the country's machine-building industry. State media KCNA said that the firing of top economic official Yang Song-ho took place on the spot during a speech at the opening of a critical factory. It added that Mr. Kim blamed the official for causing, quote, unnecessary man-made confusion. The leader reportedly told the vice premier to resign by himself, while he can still do it on his own before it's too late. Now, the rest of the cabinet was also slammed for being, quote, irresponsible, rude and incompetent. And that was in reference to modernizing a machinery plant and causing delays in an important project. Mr. Kim is known to scold officials for mismanagement. The rare public dismissal is widely seen as Mr. Kim tightening discipline among economic officials ahead of the upcoming 9th Party Congress, where economic and defense policies are expected to be high on the agenda. Taiwan's top trade negotiator says that Taipei will build what it calls a democratic high-tech supply chain with the United States. It will also form a strategic AI partnership with Washington. This follows the sealing of a trade deal between the two economies last week.
我们希望，要落实总统所提出来的2大战略目标：一是平衡台美贸易逆差；二是我们要从贸易逆差的谈判进一步升级为能够建构未来台美在高科技产业合作的战略伙伴关系。
Taiwanese companies are expected to invest some $250 billion into sectors including semiconductors and artificial intelligence in the US. But officials stress that it does not mean hollowing out Taiwan's chip-making sector, which is often referred to locally as a sacred mountain protecting the island.
这并不是供应链外移而是支持我国的高科技产业以加法。 甚至以乘法来延伸产业的实力来扩大在美国的有利的国际布局。
That breaks up next, but coming up on East Asia tonight, China is lining up new policies to drive domestic spending, with the services sector emerging as a key focus. Plus, equity markets slide further. Precious metals climb to fresh highs as Trump's tariff threat revives US-EU trade war fears. Hello there, I'm glad to have you back on East Asia tonight. We've got Roland Lim here standing by with the business news, and we are starting off with China today. Roland, where authorities are hoping to fire up spending at home. What's that all about?
Yes, that's right. Policymakers are keen to get households and service industries to spend more so that it's not just an export-driven growth for the economy. Now, China is readying a new push to boost consumption, with policymakers eyeing the services sector to revive demand. They have announced a range of incentives to boost investment. The leaders pledging to significantly lift household consumption's share of the economy over the next 5 years, though no specific targets was given. Incentives include a $72 billion loan guarantee facility for private companies to borrow for expansion, such as technology upgrades. The Ministry of Finance separately announced the extension of interest subsidies for consumers and businesses in need of equipment upgrades to the end of this year, I should say. Now, this comes after official data show the economy growing to about 5% through strong export volume growth, but amid weak domestic consumption and investments. The official also pledging to further regulate market competition.
加强重点行业价格监管，依法依规治理企业低价无序竞争，形成优质优价良性竞争的市场秩序。大力实施质量品牌战略，引导破解内卷式竞争。
China has bought around 12 million tons of soybeans, fulfilling a U.S. stated pledge to purchase that volume by the end of February as part of a deal struck between the world's two largest economies late last year. Now, Beijing halted U.S. soy purchases last year as trade tensions escalated with Washington. But in late October, reports emerged that China bought at least 2 cargoes of soybeans. And that was just before U.S. President Donald Trump and Chinese President Xi Jinping met in Busan, South Korea, for talks. The 90-minute meet between the two leaders saw China commit to purchasing U.S. soy and easing rare earth restrictions in return for lower tariffs on its exports to the U.S. The deal mandates China buy at least 12 million metric tons of U.S. soy in the last 2 months of 2025 and at least 25 million metric tons annually through to 2028. Experts say reaching the February target is likely to bolster confidence among traders that China could meet a broader goal. China has left its prime lending rates unchanged for an 8th straight month. The one-year loan prime rate, or LPR, which underpins most new and outstanding loans, remains at 3%. And the 5-year LPR, a key guide to mortgage pricing, stays unchanged at 3.5%. Expectations are building for further policy easing in the first half of the year as Beijing looks to boost consumption. The hope was reinforced last week when the central bank signaled it has room to cut banks' reserve requirements and to lower broader interest rates. Now, this month's fixing comes on the backdrop of China hitting its 5% growth target for 2025. But experts say the growth numbers show a two-speed economy where strong exports offset weak domestic consumption. The Greater China markets closing lower as regulators tighten measures against speculation. Shanghai Composite ending the day flat, while the Shenzhen component closing lower by nearly 1%. The securities watchdog fined, I should say, a prominent stock commentator around $12 million for market manipulation and imposed a 3-year trading ban in its latest crackdown against market misbehaviors. Over in Hong Kong, sentiment was doused by weak Asian markets as a resurgence in trade war concerns curbed risk appetite. Some bright spots in individual stocks in Hong Kong, though, including China Tourism Group Duty Free. Now, one of its business units plans to acquire the equity interest and assets relating to DFS's travel retail business in Hong Kong and Macau for up to $395 million in cash. Now, shares of Mart also tracking higher after the toy maker conducted its first share buyback since early 2024. Quick check on the Chinese currency, and it is also flat against the greenback, 6.959 to the US dollar. Meantime, the US dollar has eased as rising geopolitical uncertainty has revived talks of the Sell America trade. Now, that trade last emerged in April following Mr. Trump's Liberation Day tariffs. The euro, meantime, recovered from a 7-week low alongside the pound sterling as European currencies got a boost. The prospects of a trade war between the global economic heavyweights have sent investors fleeing to the safety of gold and silver, both metals surging to fresh record highs. Gold currently trading at $4,731.83 an ounce, and silver $94.97. Investors are weighing rising geopolitical and trade risks tied to the dispute over Greenland. Japanese investors giving a thumbs down to Prime Minister Sanae Takaichi's election pitch to cut taxes on food. The benchmark Nikkei 225 dropping 1.1% today. It has lost 2.5% of the last 4 days in its longest sell-off in 2 months. The broader topics also ending the day around 0.84% lower. Japanese government bonds plunged, sending yields to record highs. The 40-year rate rocketing past 4% to a fresh high since its debut in 2007. Yields on 20-year JGBs also soaring to an unprecedented 3.45%. The yen, which sank to a 1.5-year low against the dollar last week, weakening 0.2% to 1.57.74. Bets on the pace of the Bank of Japan's rate hikes also adding pressure to the markets. The Bank of Japan's expected to leave rates unchanged on Friday, but its agenda is likely to include the weak yen's impact on the economy. The yen has been tumbling in recent weeks on expectations of greater fiscal stimulus. Japanese authorities have signaled a potential intervention, warning that they would not rule out taking action to counter volatility in the forex markets.
Now, Japan's ultra-long government bond yields making headlines. The 40-year JGB has punched through 4%, a level that we haven't seen since these bonds were first launched in 2007. So to find out more about what's driving the surge, Roland Lim, well, he gets to sit down now here and tell us a bit more about that. So, Roland, it sounds like it's a big deal. Are the markets sending up a warning flare about Japan's fiscal trajectory?
Right, yeah, it is a classic mix of politics, inflation, as well as the term premium. I mean, investors are currently now asking for more compensation to hold Japanese debt for a longer period of time. I mean, the immediate trigger, of course, has to be Prime Minister Takaichi's snap election call. They are calling for the campaigning to start on February 27th and for elections on February the 8th. So the campaigning is mainly focused now really on tax relief and spending cuts.
Okay, so in a nutshell, can we say that this is actually less about a single data point, more about what kind of a Japan are we going to be funding for the next 40 years?
Right, yeah. So the markets are basically laser focused on the talk of a consumption tax cut. That includes sales tax on food as well as beverages. That's to last 2 years. Now, immediately when investors talk about tax cuts, the first thing they're going to think about, how is it going to be paid for? And because Japan already has a very heavy debt load, any hint of structural revenue weakening could actually push the yields high, and that's what's happened here.
Okay, and let's talk about defense spending. It's also in the mix there. How does that work?
Yeah, the election narrative isn't the only thing that's driving, isn't only about the cost of living relief problems that we have. We're also talking about higher defense spending by the Takaichi government. So that adds another layer. Again, if you're going to cut taxes and you're going to spend more, you're going to have to borrow more. And that also means that, again, as an investor, I want more for my money to hold longer in Japanese bonds.
Okay, so would you say that this is about Japan finally seeing an inflation story as opposed to a fiscal one?
Yes, yeah, that is true, because Japan has been moving away from an ultra-low inflation environment that we saw in the early 90s, I should say. And more importantly, the Bank of Japan has raised rates to 0.75% in December. That's a level not seen in about 30 years. So even if the Bank of Japan holds that rate steady, it's going to be making a decision on Friday. And if it holds that rate steady, that's still the new normal now. 0.75%, that's a level for interest rates that Japan hasn't seen for over 30 years.
Okay, so Roland, help us just bring this all back to the viewers. For those of us who are not working behind a bond desk, why should we care if this, 40-year yield is at 4%?
Yeah. Well, first of all, it's about government borrowing costs. Higher yields means that it's going to have to service a bigger debt burden. And that means that when it comes to budget time, they're not going to have as much to spend on its people or on infrastructure. And the second thing, of course, is the yen and the risk sentiment involved. I mean, if investors sense that there is a looser fiscal stance in Japan, they're going to demand a weak currency risk premium, i.e. they're going to want a weaker yen because the risk of holding it is going to be so much higher. So it does cut both ways, though, because a weaker yen also would suggest that it might be pulled into JGBs because the yen is so weak. And then thirdly, there's the global angle. I mean, especially for U.S. treasuries. I mean, Japanese investors are part of this big global bond ecosystem. Now, if yields in Japan start to rise and politics in Japan make it look as if that they are going to be spending more, they're going to be borrowing more, then investors might actually take some of that pool of money and then put it elsewhere. So some analysts might say that, U.S. treasuries might benefit in the peripherals.
Okay, well, we've learned quite a few things here, but we're going to leave things as that for now. Speaking of the yen, we're going to be talking to you a little bit more about Japan's tourism a little later on the bulletin. And on that note, we're going to zip out for a short break now. But coming up on East Asia tonight, Japan sees tourism soar to record highs in 2025, even as Chinese visitor numbers plunge in December. Details next. This is East Asia tonight, and here are the headlines we're following. Beijing calls for an investigation into a deadly blast in Kabul and urging Afghan authorities to protect Chinese citizens after one of its nationals were among the 7 killed. Islamic State has claimed responsibility for the attack. Britain is set to decide on a Chinese super embassy in central London. Security concerns over Beijing's use of the compound remains in the spotlight, ahead of Prime Minister Keir Starmer's planned China visit. And a North Korean leader, Kim Jong Un, sacks his vice premier over delays in modernizing a factory in what appears to be a very rare public rebuke. Foreign tourists in Japan hitting a record high last year, despite a steep fall in visitors from China in December. Now, the country saw a total of 42.7 million arrivals in 2025, topping the last record set in the year before, although the number of Chinese tourists dropped 45% on year in December. Now, the slide taking place as Beijing and Tokyo are engaged in a deepening diplomatic spat after Prime Minister Sanae Takaichi said in November that Japan could intervene if Taiwan is attacked. The Chinese government urged its citizens to avoid traveling to Japan following her comments. Chinese tourists had been the biggest source of foreign visitors for the first 9 months of 2025, making up about a quarter of total arrivals. So for more on this, we're going to bring Roland Lim back to talk more about Japan's tourism boom. Now, it's still running hot, even though arrivals from China is cooling. Help us explain that.
Yeah, I mean, Chinese tourists still account for a sizable pie of the visitor arrivals to Japan. But at the same time, I mean, Japan's demand is broader than it used to be. I mean, these days you've got strong flows from South Korea, Taiwan, and a steady pipeline of visitors from the US, especially also from Southeast Asia. And airlines themselves also have been adding capacity. So even with China getting weaker in the month of December alone, we are seeing total numbers very strong.
And also, I mean, one big reason is the weak yen, right? That's always been a big tailwind. Japan probably feeling like, it's good value for foreigners. Is that one reason?
The yen has been a huge magnet. But this story is evolving, though, because the same tourism surge that we are seeing is also pushing up prices on the ground. So hotels, food, dining, transport, all this has actually risen in hotspots and big cities. And for locals, it might feel like, that the cost of living squeeze is being felt. But at the same time, it is also boosting jobs and it's also giving more revenues to businesses.
Roland, I just want to bring in politics here. We all know Japan's got that February 8th election. Is that going to affect tourism in any way?
It can, because the markets will be watching to see what's next in terms of economic policy. So if the new administration decides on a more growth-leaning approach, so we're going to be expecting inflation as well as interest rates rising. That would feed into the outlook for the yen. So if the yen rises, well, that matters because it's been as I've said, such a powerful discount magnet for Japan. So then Japan will probably have to reposition itself, not just being a cheap destination to go to, but perhaps be a more experience or more events-oriented destination.
And of course, a big holiday that everyone's looking forward to, the Chinese New Year holidays is coming. Mainland China, I believe they get a week-long break. And you think that's all going to add to Japan's numbers?
Yes, the Chinese New Year holiday travel patterns is going to be a big tell. Because even if the total overall numbers are going to be strong, a softer Chinese segment is going to bite for Japan. But it's not just about the headcount, because it's also about what people spend on and where they're going to be spending it. And earlier, I spoke with a tourism analyst. His name is Gary Bowerman from High Yield Tourism. And I asked him about whether Japan can actually cushion the blow from fewer Chinese tourists. Have a listen. Japan, as I've just mentioned, posted record visitor numbers. When you break it down, what's really driving it? Is it the weak yen? Is it more flights? Is it pent-up demand or something else?
Yeah, hi, Roland. I think it's a combination of all of those things. Certainly since the pandemic, we've seen a huge growth in desire to travel to Japan. We've seen, as you say, a great supply demand in terms of connective flights. We've seen really, really strong rebound from key markets like China up until November, but also South Korea, Hong Kong, Taiwan, Thailand as well. So it's just been, over the past few years, it's been the destination in Asia Pacific. And the figures show that 42 million visitors, 42.7 million visitors last year. That means that it's doubled its visitor arrivals since 2016. That's quite an achievement, even though that's 5 years late. It actually hoped to break the 40 million boundary back in 2020 when it hosted the Olympics, or it was supposed to host the Olympics, but COVID intervened.
This trade spat between China and Japan, I mean, mainland China is still a huge part of Japan's tourism story. With China arrivals getting softer now, has Japan actually China-proofed its tourism market, or are the market still vulnerable to tensions if it flares up again?
Yeah, I don't think it's China proofed. I think what we're going to see now is another reset, and a lot of this will depend on the election and who wins on February the 8th in Japan. But the current status is that the Chinese market is weak and is going to get weaker through the year. We've got the very important Lunar New Year holiday coming up, and obviously that will be a benchmark of just how weak the Chinese market is into Japan. But as you said earlier, Roland, somewhere between 21-24% of visitors last year, depending on the finalized figures, were from China. You know, that's a huge part of the market. And it's not just about the visitor numbers, it's their spending power. And because Chinese tend to travel to Japan for short stay trips, they tend to spend more because they're there for a short amount of time and they have bigger budgets to spend. So it's a very, very big issue for Japan going forward, particularly as it has this longer term goal of it wants to attract 60 million visitors in the coming years. You'd have to say without the Chinese market, that simply wouldn't be possible.
The weaker yen has been one of the things that has been attractive to many visitors. Are you seeing bargain hunter boom, that i.e. more people but cheaper trips, or are you seeing high yield booms? I mean, you know, luxury hotels, shopping, longer stays. I mean, what does the data feel like on the ground for you?
I think it's very mixed. I think you're right. I think initially, as we came out of COVID and Japan was a very, very desirable travel destination and the yen dropped significantly, that had a big impact. It was a big incentive for people to travel to Japan and to shop and to stay. But as you reported quite recently, just before this segment, you know, inflation is rising in Japan. And so the whole travel desire and the whole affordability of the country is changing a little bit. We may see depending on the election, we may see a more expansionary economic policy, which possibly could push up inflation. So the value of the yen is very, very important and has been over the past 2 or 3 years. But going forward, it will now be Japan will have to sell itself on its country, on its destination, on its experiences, not just on that lower yen, because I think that actual impact is starting to dissipate a little bit.
And also, Roland, I want to pick up on something interesting about Thailand's tourism. Apparently, it's kind of wobbly because Chinese arrivals have gone down by 1/3. That sounds pretty massive. So do we know what's spooking of the travelers?
Well, analysts say that it's mainly confidence. The region's been hit about headlines about scam networks and scam centers, and about cross-border safety concerns. And Thailand has also been dragged into this news cycle about the skirmishes around the Cambodian border and the trade, the tensions there. So even if these incidents aren't happening in the tourist zones, well, I guess the perception can be that it's not so safe in Thailand, and that's probably the reason for it.
Okay, well, many thanks for your insights. Thanks for joining us this evening, Roland. Now, turning our attention to other news now. Vietnam's top leader, To Lam, says that the ruling Communist Party is, quote, determined to fight corruption as it holds its 14th National Congress. In an address broadcast live on national television, he emphasized the party's commitment to tackling graft, describing the private sector as an important pillar of the economy. To Lam pledged for Vietnam to achieve an annual economic growth of more than 10% for the remainder of the decade, above a missed target of up to 7% for the first half of the decade. And that's amid the intensifying US-China rivalry and growing uncertainty in the global economy. Mr. Lam also stressed that institutions remain the biggest bottleneck in unleashing Vietnam's economic growth and urged for quicker legal reform. The country's most important political conclave has been underway since yesterday and will last for a week. CNA's senior correspondent Leong Wai Kit has more on what to expect from this twice-a-decade Congress.
Some 1,600 party delegates, representing more than 5 million party members, will meet to discuss various issues, including choosing their general secretary.
That post is currently held by To Lam, who's helmed the seat since August 2024, following the death of his predecessor, Nguyen Phu Châu. Other senior figures in the party include State President Leung Khương and Prime Minister Pham Minh Chinh and Chairman of the National Assembly, Chen Thanh-man. So, what can we expect from this year's Congress? One key task ahead is the selection of the party's Central Committee, which will in turn choose the Politburo, the party's top decision-making body. It's set to have around 17 to 19 members. And after that, all eyes will be on who leads it. For now, Mr. Lam is widely expected to remain General Secretary of the Communist Party. Observers say he's seen as an effective leader, having moved quickly to push reforms, including merging ministries and streamlining state agencies. But there's also talk that he may seek to consolidate power by combining the role of the President and General Secretary.
Analysts say this is unlikely for various reasons. One, the party's Politburo had earlier updated regulations on the list of leadership positions. This suggests that the current leadership structure is likely to remain. Two, combining the role of General Secretary and President could overburden a single leader.
Delegates will also be reviewing Vietnam's reform agenda and long-term goals. Ambitious targets have been set for the future, including plans to achieve an average annual GDP growth of at least 10% for the next 5 years. Vietnam also aims to achieve high income status by 2045. To get there, Vietnam says it will step up efforts in science and technology, political stability, national security, and foreign policy.
The World Economic Forum's annual meeting is now ongoing in Davos, Switzerland. World leaders and top business leaders are in attendance amid rising geopolitical and trade tensions. A Chinese Vice Premier He Lifeng is delivering a special address this moment, and you're watching live pictures of the event. Let's listen in.
Last year, tariff and trade wars have inflicted significant shocks on the world economy and posed serious challenges to multilateralism and free trade. In response to the changes of the world of our times and in the dynamics, President Xi has put forward the Global Development Initiative, the Global Security Initiative, the Global Civilization Initiative, and last year, the Global Governance Initiative. Pooling consensus and strength for solidarity and cooperation over division and confrontation, and providing China's solution to the common problems of the world. In light of the current situation, I wish to share a few observations. First, we should firmly support free trade and jointly promote a universally beneficial and inclusive economic globalization. Economic globalization, driven by international specialization, collaboration, complementary strengths, and the pursuit of win-win, is a prevailing trend of history. It has benefited many countries, including China, and enabled them to achieve fast development.
And that was Chinese Vice Premier He Lifeng delivering a special address at the World Economic Forum's annual meeting in Davos. On that note, we are going to go for a short break now, but coming up on East Asia tonight, an Arctic cold snap sweeping across East Asia. Snow already falling in some cities, with more set to get a taste of the cold in the days ahead. The spat over Greenland is deepening tensions between the US and the EU, with relations already fraught over the Ukraine war, and it's added to concerns over the Trump administration's broader Europe strategy. William Denslow files this report for CNA from Brussels on what might be a more fractious year ahead for two of the world's oldest allies.
Allies don't always see eye to eye. But relations between the US and European Union have grown especially frosty over US President Donald Trump's desire to take control of Greenland. The semi-autonomous territory of Denmark is deemed by the White House as a matter of national security, with the administration citing concerns of a growing Russian and Chinese presence in the Arctic region. The Danish Prime Minister Mette Frederiksen says Washington has no right to annex its territory. A scenario once considered unimaginable, it's now drawn fears that the US poses a looming threat to a fellow NATO member.
Det her handler ikke kun om Grønland eller om kongeriget. Det handler om, at man ikke skal kunne ændre grænser med magt, at man ikke kan købe et andet folk. Og det handler om, at små lande ikke skal frygte store lande. Det er derfor, vi klart siger fra. Og det er derfor, at mange allierede gør det samme i Norden, i Europa og i resten af verden.
In its most recent national security strategy, the Trump administration stated that Europe remains strategically and culturally vital to the US, but suggested that the status quo could change. Washington warns that in the next few decades it's unclear whether certain European nations will be strong enough to remain as reliable allies. The US blames policies championed by the European Union for its current trajectory. Policies like the bloc's commitment to becoming climate neutral by 2050, which the White House rejected as disastrous ideologies that have so greatly harmed Europe, threaten the US and subsidise adversaries. The US also claims the EU has been weak on migration, resulting in what it claims to be a loss of identity and self-confidence. While the EU has taken steps to bolster its borders and its ability to remove people without a right to stay in Europe, senior officials here stress they won't succumb to political interference. But the bloc's defence stance has shifted substantially since Donald Trump became the US Commander-in-Chief again, holding firm on some requests and giving in on others. The EU has pledged to pump more than $900 billion into its defence sector, following US pressure for Europe to take primary responsibility for its own security, including that of Ukraine.
In Washington, there's a belief that if Europe is going to spend more, much of that will be spent on American equipment. That's clearly the preference. And in fact, it may be the reality, because for many things, the lead times are such that it's just not really practical for Europe to build those capabilities in a short time frame.
Some of these commitments were baked into a trade agreement brokered between the US and EU last summer. That deal, which is yet to be ratified by Brussels, put a 15% cap on US tariffs for most European exports. But the US maintains that the trade relationship, worth more than 40% of global GDP, is unfair, citing a trade deficit of around $147 billion, according to 2024's figures.
It doesn't protect the EU from further escalation, I think, in the future from the Trump administration. A conflict is foreseeable in the future, you never know. Again, that national security strategy is an illustration of an ever-increasing conflictuous relationship, I guess, between the EU and the US.
The US maintains that transatlantic trade remains a key pillar of the global economy. But clashes over issues such as Europe's regulation of big US tech companies to ensure fair competition and manage illegal and harmful content continue to fuel divisions. And as President Trump continues to push an America First agenda on both the security and economic fronts, trust between these long-standing allies is increasingly in short supply. For CNA, I'm William Denslow in Brussels.
224 North Korean defectors resettled in the south last year. That's a dip from the year before and sharply down from years earlier, according to Seoul's unification ministry. Human rights groups say direct insight from inside the North Korean regime is becoming increasingly scarce. CNA senior correspondent Lim Yun-suk has more.
Artwork lines the halls inside South Korea's National Assembly, offering glimpses of daily life in North Korea. The exhibition, created by a non-governmental organization, focuses on the experiences of ordinary citizens' realities that have become harder to document as Pyongyang restricts movement and communication. Many of the works are inspired by The Accusation, a collection of short stories by Bandi, a North Korean writer whose identity remains unknown. The stories were written inside North Korea and smuggled outside, offering rare insight into the lives of North Koreans.
이번 전시회에는 남북한의 작가분들이 다 함께 공동으로 참여를 해주셨어요. 근데 조금의 이제 차이점이라고 할 수 있는 것은 탈북 작가님들 같은 경우는 자신들이 직접 북한에서 생활했던 그 내용들이 자기가 겪었던 삶이기 때문에 그것을 그대로 그림으로 표현을 해주셨고.
As Pyongyang tightens border controls, the number of people able to carry stories like these outside North Korea has sharply fallen. South Korea's unification ministry says 224 North Koreans resettled in the south last year, mostly women. That's down from 236 defectors the year before, and far below numbers before 2020, when more than 1,000 North Koreans typically defected each year. Defections plunged during the COVID-19 pandemic as North Korea sealed its borders. But experts say the flow of people and information began shrinking years earlier.
Certainly since 2020, but really from 2017, the country itself has slowly become a place where no information goes in or out. People don't come in or out without permission. Without information, we can't assess what is going on.
As North Korea remains largely closed off, organizers say exhibitions like this play a growing role in preserving testimony, amplifying voices, and documenting lives that might otherwise remain unseen. Lim Yan-suk, CNA, Seoul.
A blast of frigid Arctic air has sent temperatures plunging across parts of East Asia. Snowflakes fell over Shanghai last night in a sight not seen since 2018. China's Met Agency forecasts that temperatures in southern regions could drop between 10 and 20 degrees. Travel disruptions are already mounting. Authorities have shut more than 200 roads in a dozen provinces due to snowfall and icy roads. Now, further down south, the Hong Kong Observatory warning that the intense winter monsoon will bring temperatures down to around 10 degrees Celsius. It adds that the incoming cold air coinciding with high humidity levels could make it feel a lot colder for residents. And in Japan, the weather agency has issued a heavy snow warning with major transport disruptions reported in parts of the country. Up to 50 centimeters of snow is forecast for northern regions of Hokkaido and Tohoku, with strong winds in parts of Yamagata and Fukushima. More than 90 flights have been cancelled, affecting some 6,000 passengers so far. Train services have also been impacted. The South Korean authorities, too, have raised cold weather alerts. Most inland areas are expected to remain below freezing. Police and firefighters have been deployed to check on vulnerable groups. The bitter chill affecting East Asia is expected to last through the week. Also in South Korea, a dessert known as dujonggu has become a must-have among its younger generation. Short for Dubai Chewy Cookie, the brown confectionery is popping up everywhere, from trendy cafes to traditional restaurants. Now, its appearance may resemble the Japanese mochi rice cake, but it is far from it. The stretchy texture comes from marshmallow, wrapped in chocolate and stuffed with pistachio and kunafa filling. Despite the name, the cookie is not from Dubai. It's inspired by a Dubai-origin pistachio kunafa chocolate, often called fix chocolate, that went viral online and sparked this whole craze. But doctors say the indulgence may come at a cost. One cookie contains up to 600 calories, about 1.5 to 2 bowls of rice. Experts warn that the dense mix of sugar and fat makes it easy to overeat, especially when treated as a light snack. And that wraps up Tuesday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia and find us on Facebook and YouTube. Thanks for watching.